Money generated with little or no effort is referred to as passive income, whereas active income requires a significant amount of time and effort. While the former does not necessitate physical or active participation to earn cash, the latter requires material participation. Keep watching to learn more about passive and active income, as well as their significant differences. Hello, this is Be Financially Independent. Get started planning your financial future today by subscribing to the channel and turning on notifications to be notified of new uploads. Let us start this discussion by giving a clear definition of what is passive and active income. So active income is money earned as a result of providing a service. Active income includes wages, tips, salaries, commissions, and revenue from firms in which you have a meaningful stake. Active income, passive or unearned income, and portfolio income are the three main types of revenue. The most prevalent kind of active income is money received from an employer in the form of a paycheck. Income from business activities is deemed active for the self-employed or anybody else with an ownership interest in a business, if it fulfills the Internal Revenue Service definition of material participation. This implies that at least one of the following statements is correct. During the year, the taxpayer works 500 hours or more in the business. The majority of the work in the business is done by the taxpayer. During the year, the taxpayer works more than 100 hours in the business, and no other employee works more hours. Passive income is earned when someone earns money through a business in which they are not actively involved. Invested income, such as dividends and capital gains, is referred to as portfolio income. Depending on the law in effect at the time, these various sources of income may be taxed differently. Portfolio income, for example, is now taxed at a lower rate than active income. Let us now consider an example of active income from a business. Take a look at this scenario. Patrick and Emily, who are not married, each own a 50% stake in an online firm. Patrick is in charge of the majority of the company's day-to-day operations. As a result, the IRS considers his earnings to be active. Emily helps with marketing, but only spends a few hundred hours a year for the company. As a result, the IRS deems her business revenue to be passive. The material involvement rule was created to prevent people who don't actively participate in a firm from generating tax losses that they can deduct from their active income. Okay, so having a passive income gives you greater financial flexibility and frees you up from the regular workday to pursue other investing options. Passive income can help you focus on meaningful financial goals, such as saving funds for retirement, in addition to giving you more time. It could also be a useful source of income if you decide to resign or lose your job unexpectedly. Let's look at what passive income is and why it's significant, as well as 5 strategies to generate it. Passive income is money earned consistently from previously completed work, or work that requires little to no daily effort. Royalties from books, percentages of purchases made through links on your website, rent from property, and interest collected from savings accounts are all examples of passive income. The constant flow of cash that builds security over time is referred to as passive income. As we have previously mentioned, active income, on the other hand, includes your pay, salary, tips, or commission from services with substantial participation. A teacher's or accountant's continuous paycheck, as well as payments from services such as plumbing, are all instances of active income. Earning must be made on a regular and consistent basis. If you are already employed but wish to live a simpler or happier life, you may profit from establishing a passive income. Many passive income possibilities can help you achieve your financial goals in a more pleasurable and effective manner. Whether it's creating a blog or renting out property, money made while you sleep is commonly referred to as passive income. It's a way to make your money work for you while you profit passively from the labor you've already done, commitments you've made, and investments you've made. Here are 5 reasons why passive income is valuable and beneficial to your life. The first is it saves time. One of our most valuable possessions is our time. Time, unlike money, is a finite resource that cannot be gained. Although you will not be completely free of responsibility, passive income allows you to spend your limited time doing things you want rather than just finishing activities to pay the bills. Passive income allows you to follow your interests. With the gift of time comes the gift of choice. Passive income earnings may enable you to pursue your passions or contribute to humanitarian initiatives to enhance society, resulting in a higher quality of life. This allows you to form deeper and more meaningful connections with the people and environment around you. It also reduces fear and worries about the future. passive income provides security and alleviates the fear of not being able to pay your payments. Passive income gives financial security and long-term stability, allowing you to manage yourself, your time, and your possessions more effectively. Ensures financial security. Financial stability provided by passive income may enable you to retire earlier comfortably, as well as allow for financial growth. The freedom to focus on building money rather than simply maintaining your existing standard of living brings financial clarity. It speeds up the completion of your financial goals. It enables you to work from any location. You can work from any place when you are not bound by a bi-weekly or monthly salary. Passive income allows you to be more flexible in your life than other forms of income. Working from anywhere gives you more time to travel or pursue other interests, allowing you to enjoy life while maintaining your quality of living. Hey there! We hope you are enjoying this video so far. If you do, show us some love and please hit the thumbs up button, and feel free to share your thoughts in the comments down below. Let us now discuss how people get passive income. Making a passive income requires an initial investment of either money or time. You can start earning a residual income in a variety of ways, but it's crucial to pick the one that best fits your lifestyle and skills. Consider the following possibilities. Property for rent. Renting out a house you already own or investing in new properties can provide you with a passive income. Because learning how to make it a viable operation might take a long time, you might want to hire a management company to keep an eye on the property and communicate with the tenants. Checking and savings accounts with high interest rates. There are various online savings and checking account options that provide higher interest rates than the average. Investing in these high-earning accounts is a terrific method to generate a passive income with minimal risk. Although it will take some time for any benefits to manifest, you may want to investigate this alternative because of its simplicity. Affiliate marketing. If you already or plan to own a blog or website, affiliate marketing could be a good way to supplement your income. By tying a third-party product to their accounts or websites, website owners, bloggers, and social media users can effectively market it. This necessitates the use of a platform to promote other businesses or affiliates. If you do, it can be a simple method to earn money while you sleep. You earn a modest commission when a customer purchases a product after clicking a link on your website, blog, or another platform. This method comprises establishing a trusted user base, and then using your credibility and their faith in you to promote your partners. The difference between passive and active income is 6 points. The first is definition. Individuals can earn passive income with little or no labor and without tangible input, and they can even become their own employers. Active income, on the other hand, necessitates physical and material participation, and individuals work for a boss to whom they report. Interrelation is the second point to consider. Active income provides resources for passive revenue, whilst passive income serves as a supplement to regular income. The third factor to consider is consistency. Passive income might take months or years to build up and isn't always steady, but active income is faster and guarantees a consistent income stream. Another factor to consider is the lifestyle effect. Individuals with passive income can commit more time and energy to recreational activities and hobbies, whereas those with active income may not have enough endurance to follow their hobbies or even have time for their families. Another area where the disparities might be seen is in taxability. Passive income is subject to possible tax deductions, whereas active income is, of course, taxable. Let us now discuss their outcomes. Active income necessitates being up, active, dedicated, and working, while passive income generates money while sleeping, traveling, or doing something else. In general, passive and active income are very different from one another. Individuals with no active income will have no resources to invest in order to earn a passive income, while passive income can be used to augment a regular income. Active income is essential for everyone looking for it. However, there are situations where an individual may be required to put in some time to make money passively, such as supervising a task. As a result, the Internal Revenue Service has established criteria for determining the difference between passive and active income. That's it for today's video. If you want more discussions like this, please make sure to subscribe to the channel and turn on the notifications to be notified of every upload. This is Be Financially Independent, and we will see you in our next video.